Hey everyone, welcome back to the channel. Bitcoin's been on a tear lately, and market sentiment is running hot, so a lot of people are asking, can I still jump in? Today, we've got a fresh AI-generated trading strategy report in hand. Let me break it down in plain English and help you make sense of what's really happening in this market. Let's start with the big picture. This report was generated on August 22, 2026, at 7 a.m. The system classifies Bitcoin's current market state as a strong bullish trend, a trend strength score of 0.88 out of 1, which is extremely powerful, with a 90% confidence level. The recommended approach? Trend following. Bottom line, the direction is crystal clear, so ride the trend. One time frame isn't enough, so the report checks all of them. And here's the thing, every single 1 point's bullish. The 1 hour shows a bullish alignment, the 4 hour has a bullish engulfing pattern, the daily prints 3 white soldiers, and the weekly shows a double bottom with a bullish engulfing plus a big green candle. When all time frames line up like this, the signal is about as consistent as it gets. But here's the catch, it's not that simple. Across those same time frames, the RSI is flashing extreme overbought warnings. The 4 hour RSI is at 94.9, the daily is at 94.3, and the 1 hour sits at 71. To put that in perspective, anything above 70 is considered overbought. Above 90 is off the charts. Think of it like a car at full throttle, fast, sure, but the engine is already screaming for a break. Now here's something interesting, the report flags a contradiction. The machine learning model's short-term price forecast is negative across the next 10 periods, targeting around $77,100, which suggests a potential pullback of about 1.7%. But the system is clear on this, it's a short-term correction signal, not a trend reversal. When trend strength hits 0.88, that takes priority over short-term pullback signals. So what's behind this bullish strength? First, the daily chart shows a massive volume surge, 3.24 times the average, and volume price confirmation is rated confirmed. Second, the weekly double bottom with a bullish engulfing pattern creates a triple confirmation. Third, the moving averages are in full bullish alignment, price above the MA20, which sits above the MA50. And fourth, the fear and greed index sits at 72, solidly in greed territory. But the bears have their own ammunition. The biggest red flag is a 4 hour signal called a bull trap, with a scary 80% confidence level. What's a bull trap? It's when price looks like it's about to keep climbing, but in reality, it's a setup designed to lure late buyers in right before a drop. On top of that, 4 hour volume has shrunk to just 0.65 times the norm, with bearish divergence showing up. Translation: short-term pullback risk is real. So what's the bottom line from all this? 8 words, strong uptrend, but wait for the dip. The trend is powerful, but with extreme overbought conditions and a bull trap signal flashing, chasing the price here is a bad idea. The smart play: keep your hands steady, wait for price to pull back into key support, then enter in stages. Trade with the big trend, avoid the short-term noise, that's what professionals do. Now let's get specific. The main strategy is called buy the dip, meaning, don't chase the current price. Instead, wait for a pullback and then enter. The target zone is $75.